All right, welcome everyone. I have a special treat. I do mean special. John Lee and I have known each other for a long time, and John's one of those very smart guys, but he's also very friendly. He came up to me, to my recollection, and we chatted and we kind of hit it off right away. And at the time, if I recall, you were working for Gold Money, and Gold Money
Yes.
it just started. I was very enthused about that concept because of the big picture. My dream is always to put, the power of money back into people's hands. And you do that by circulating real money. And John was part of that. But we stayed in touch. And I think you ran a fund for a little while. And I mean, the whole way you watched my career, twist and turn and grow and fall and grow. And same thing with you. And I remember when you, to my recollection, stopped the fund and started the company. And remember, I was there and I was so excited about the prospect and you both. And that was that coal project. And I went to probably the most interesting spot I've ever been in. I'm pretty world travel, and that was Mongolia. And not to put down John a reality check. That was the starkest place on the planet I'd ever been. I don't think I saw one green leaf or blade of grass almost the whole time I was there. So that's my background on John Lee. John, thanks again for coming on with me. Say whatever you want, and then the first thing I want to do is start talking. So,
Yes, David, it's great to catch up. Time flies. It's been almost 20 years. I am talking about Mongolia. I'm right now in Mongolia. We had a lot of fun. James Turk has been my mentor at Gold Money, which is a system similar to PayPal, except you're transacting with units of gold. And then I spent about 10 years running a fund. It was doing actually really very well until the financial crisis hit. And then after that, there was just too much regulatory hurdles. After 2011, when I sort of recovered quite a bit of my money, I thought it would be interesting to tap into on the other side of the aisle and running a mining company almost as a hobby. And little do we know, it's 12 years later, and the company Silver Elephant, it's formerly known as Prophecy, is raised over $150 million in the Toronto exchange. We probably not many CEOs, junior CEOs, has done more M&A than I have, and not many people can you say that have survived the thick and thin to stay where we are. And not only do we, even though the share price has been somewhat depressed, but we have a portfolio of wonderful assets in silver, in vanadium, and nickel, and now Silver Elephant is on a standalone basis with the silver assets, and the vanadium and nickels were dividend out to shareholders. So it's been quite a rough riding. It's been a lot of ups and downs, and the last 12 years, I think silver probably spent about 4 years going up. The other remaining years going sideways or down, and it's been a bittersweet. But I do think that there is a very promising prospect on the horizon, David.
very good. Well, let's just dive right in and let's go ahead and get your silver forecast.
Yes. Well, David, in 2022, in January, I came on a couple of interviews and I said that, look, this year is going to be a down market, big time, even, sort of to the magnitude of a crash. We have that on the NASDAQ and the S&P. I forecasted a NASDAQ 100 at 11,000. We touched that target. And I also forecast 10-year at around 3%. And back then it was not even 1% the 10-year. And I thought that 3% was aggressive, and we're sitting at almost 4.5%. And that is the highest percentage of increase in interest rates in history. And then moving on, and the reason I was sort of neutral on gold and silver, I sort of disappeared from the scenery for a while, is it was just going to be very tough to swim upstream with the rising interest rates, and also with the correction in the equity market for junior miners and for silver miners. Going forward for 2023, I'm getting increasingly bullish, and potentially we could have rack up a good chunk of gains, recovering back to the $28 to $30 level. And then gold could be trading at $1,800 to $2,000, and potentially challenging $2,000. And the reason, I think a couple of reasons. First of all, fundamentally, the interest rates I think is going to take a breather at least for the next 6 to 9 months. the oil prices come back down below 100, and so that's going to provide a bit of tailwind to the commodities. And secondly, the equity market is on, so both the interest rate and equity market is going to take a breather. And then secondly, the dollar index has gone up from 90 to 110 historically. When you have that sort of a move, a pause is in order. And then if you look at the fundamentals of the dollar, which I'd be very interested to talk to you about, expand that particular subject because it's antithesis to the precious metals market, it is in a very delicate and precarious situation. So my 2023 forecast for the dollar will be sort of between 105 to 120. And I think it's going to struggle to take out the 115 range. But regardless of that, you're seeing the equity market and both the equity market and the gold and silver probably will start decoupling from the dollar index going forward. David.
All right. Well, you opened up with quite a bit. Let's zero in on the dollar for a moment or two. So if we go back to I don't know, early 2000s, I connected with Jim Poplava of the Financial Sense News Hour.
Yes.
And John, I talked to Jim and told him the silver story in an open format. It was recorded for both the internet, and he had a live station or two that carried the broadcast.
I remember, yes.
And we got done with the first interview. And off air, Jim's very bright and he was very open-minded. But he was implying, and very kind about it, that, come on, David, this sounds too good to be true. You know, I don't know about this. And he, even kinder than that. But he asked a very important question.
About silver.
Everyone should ask. He said, right, how can you verify what you just told me? And I said, that's pretty easy. He goes, well, what is it? I said, go to CPM Group in New York, and get their silver survey for last year, for the new, the newest one, and have a look. So Jim being Jim, probably did it right after hanging up the phone. He overnighted it, which cost more than 2 days because he wanted to see it. He got it like the next day and he read the whole thing and called me back on Monday and said, this is better than you said. I said, well.
Like in terms of the fundamentals of silver?
Yeah. Now that's back in the early 2000s. And we're being in deficit from 1990. Every year we're eating away 100 million ounces out of the stockpile above ground. No one's mining silver. And then, of course, the China boom hits, and we can talk about that. My point being is that there's a lot to the silver story. And just to back you up, you couldn't have been in a better place from really 2000, 2011 than gold or silver. Silver outperformed gold a few of those years, and gold being the more of a conservative investment in the precious metals for 11 years and went up, up, up. And when we got to the top, I called it. So no one could say, well, I go one way. I'm a permabull. No, I'm not. But I don't get it right every time. And I expected a big breather, John, like 2 or 3 years. But if you would have told me 10, or that in 2022 at the end of the year, you and I would be talking after all we've been through and what you picked up in Silver Elephant and, all the changes. And I mean, the grades and stuff that you have are phenomenal. David Smith went down there a couple of times in that high altitude environment and on and on. I know I'm yakking, but honestly, some people really, in my opinion, don't appreciate the kind of efforts that someone like myself and yourself go through to try to bring value to investors. And yet you just can't control the market. So here we are 10 years later, it's been in the doldrums. I mean,
and you know what, David, I thought that you brought an excellent point before I forget. This coming rise for silver is going to be quite similar, in my view, of what happened in year 2000 versus, say, in 2017 or in 2011. And the reason being is if you look at the gold to silver ratio, back then, I remember gold took out 300, silver was like $4.50. And we are now at a gold to silver ratio are at a very elevated level at around was 90, almost 95, and now we're about 87. I think that the ratio has topped. And that 90 ratio has only been surpassed a couple of times in the past. So in this very sort of nonchalant environment for gold and silver, everybody's given up. that and the silver are embarking on that stealth rally, and it was below gold. I think, like, look, 2017 silver, I never thought we'd go under 20. It went to 17 and a half, which is when the rally started in 2020, but gold never went to that level, which is 1550. So that just tells me that I think there's already people seeking refuge in safe haven in gold. But silver is a lot more volatile. It's a bit more retail play. So gold has established that plateau, and silver had a brief dip to 1750, and now the weekends has been cleaned out. And then both metals are, I think, is going to do quite well in 2023. And the reason is actually a bit more like year 2000. I think there is a bit of Titanic paradigm shift. Instead of, like, you got a knee jerk, right? Whether it's financial crisis or is it COVID, but this time it's not one particular event, but I think there is a paradigm shift in how the dollar was in the U.S. hegemony in the last, from the Bretton Woods Accords in the 1970s, and sort of to this new paradigm of, I think, what some people call the multipolar scenario, and that is going to be, and I don't think that's going to play well for the dollar, David. I think that is something. That is I think quite a few analysts are missing. Having said that, there's still the interest rate differentials, there's still the supply and demand, but adding to that, it's really for the first time I'm looking at the gold and silver. I studied the gold and silver market for over 20 years. It's really the first time I think that people are really going to start having second thought or start seriously evaluating the merit of accumulating physical.
Yep. I'm going to stop you there, John, because I made a note and I didn't say it. I went off on the Financial Sense News Hour. But the most important point, I'll voice it and I won't hand it right back to you, was the dollar index at that time was 120. And I kept telling Jim every show. In fact, he had me on weekly for about a year. And of course, after a while, it got stale because you can only talk precious metals and economy
so long,
and that's fine. I honor the fact that we had that relationship and still have a good friendship. But that index went from 120, and I'd have to look at a chart, but it went down, down, down like the burning ring of fire. And of course, the metals went up, up, up. I want to be clear, and I want your opinion. There is a very strong correlation between the dollar index and the gold price. I won't deny it, but it's not as strong as some people think that that's all that it is and that it can't decouple, because it can.
Yes.
You've got 20 years, I've got over 40. And so I've had more experience than you. But I just want to hand it back to you and continue on. Let's talk the dollar for a while.
You're right. Well, David, at 120, I remember in year 2000, I was holidaying in Bali, Indonesia. All the money, all the capital, all the attention, the dot-coms, the Hollywoods, anything is all concentrated with the dollar. And then you have the 1997 financial crisis, the Asian financial crisis, and so all the capital was geared and gravitated to the United States, and what we have today, David, at $1.20 with a 4.5% interest rate and highest interest rates of the G7 countries, and the rest of the developing countries are reeling in COVID restrictions and whatnot, or civil war, is we have this, and is that the whole world is dollarized. So we are having the same, very similar scenario again, where everything is dollar centric, everything's all about the dollar, but however, at the flip of a switch, that could all turn itself upside down. I do agree with you about the dollar system. The dollar and gold might decouple or depeg, and this time the reason is people will be opting out of this whole system. And let me elaborate a bit, David.
Sure.
I recall last time oil was $150 in 2011. Canadian dollar was trading at 25% premium. Aussie dollar, I think at the time, was actually trading at a premium to Canadian dollars. So up till about 5 years ago, countries have their sovereigns. But now my belief is all of that is being subordinate. All of the guys that call the shot. There's one group of guys that call the shots, and all the national politics is being hostage and subordinated, including the currency, the politics, the fiscal policy, the all of that. And so increasingly people are looking at there's not a lot of arbitrage, like Canadian dollar versus Australian dollar versus British pound versus euro. They increasingly look all the same. So under that scenario, people are just like, well, there's just enough of it where they're looking for alternative form of diversifications that used to be obtained through sort of Australian dollar as a commodity play, Canadian dollar as an oil play, and the British pound has that sovereign element to it, and euro was relatively stable. You keep some euros going on vacation, but now everything's the same, David. So I think that in itself is one point. And then the other point is something I love to touch base upon is that hegemony, the geopolitics side. And if people, as I said, that maybe I'm sure someone else, that the dollar since 1970 is really it's really a arrangement of convenience, is what I call it. Because America has the biggest gun. It has a status of neutrality. It's almost like the world's policeman, right? It's like the big brother. Right. And in addition, if you made it well out of Russia or Philippines or Brazil or even China or Russia, you can count on going to Miami, and it's a place of last refuge. But however, I think all of that is sort of, gone to the wayside, David. I think a lot of people are just sort of being fed up with this irritable temperament of the U.S. policies, and with the SWIFT system used to be the only dominant system there's available. But now people are increasingly getting shut out of the SWIFT system for one reason or another, especially if the tic-tac war between China and the United States would worsen. Then if all the other countries have to take sides, then people have to think twice about continuing to be part of the SWIFT system. And if you get out of the SWIFT system, David, then clearly, then that will only speak well for further decoupling of gold and silver.
All right. Well, tell me more on that. So tell me, you're implying BRICS here. So we got the BRICS, we got the US dollar. How do you see that playing out in the future?
Well, first, I think within the G7, there is, as I said, all increasingly there's going to look pretty much the same. So I think if we just split the sort of the world into two baskets, right? There's the G7, the Europe, the Japans and the United States. It's really sort of in part of the Bank of International Settlement. So all of that, even though right now sort of it's being band-aided, they're losing their cohesion amongst themselves. So and the dollar is a function of that. And so therefore, as I said, you're going to see a band of dollar trading between, say, 105 and 120. And I don't think that's going to be driving sort of gold going forward. And the reason I said that is the second part of the away from the G7, the savers in Asia, the Russians, the Saudi Arabians, the Turkish. You're talking population outside the G7 are probably 60% of the world population, right? And they have accumulated quite a bit of wealth, David. So if you look at, used to be United States has biggest gun, the last resource nuclear, but now you have biological weapons, chemical weapons, sonic weapons. So a lot of ways to do a lot of damage. Technology-wise, countries are becoming increasingly independent, so they don't rely. There's a very little reliance on the United States for technology. And then if you talk about, for example, another areas of arrangement convenience is, say Japan, for example, right? They have to sort of almost kowtow to the United States in physical monetary policy, in pleading allegiance. And but what if China were to make a move across the Taiwan Strait, and then the United States doesn't show up, emperor of no clothes, then Japan is like, well, what am I, then what is going on here, and what am I going to do with $1 trillion of U.S. Treasury?
Yeah, let me stop you there because that's key. And, I've done a thought experiment on that, but I think it's, we're not just blowing hot air at each other. We have high respect. We're both highly studied. And I think that's a plausible situation. They go across the Taiwan Strait. All of a sudden, the US of A, under a current administration, or maybe any administration, is a no-show. And now what does Japan say? I've got $1 trillion worth of your crap, and I want to get rid of it. And what does that do? Well, that's financial warfare. And in my opinion, financial warfare really started with the Russians, because the Russians had the money to pay good on their bonds. It's just that we bailed them in and said, you can't use it. So an international currency, a reserve currency, should be absolutely 100% neutral. I don't care how many wars are going on, and I hate war. But even if they're going on, the currency should stay neutral, and it wasn't. So the Americans weaponized the dollar, and then if Japan gets hung out, what are they going to do? So back to you, John, because this is, I think, more key than most people.
And you know what? Russian is 80, 90 million people with about $300 billion. You talk about Japan, that's almost $1 trillion. And Japanese are the consummate diplomats. So they are, and remember too, they're a very astute student of history, and you have to see the World War II. So the US and Japan are not exactly see eye to eye, but they need that protection from China. But then if China and United States go into long distance, China has got $1 trillion of foreign reserve as well. There's 1 billion people population. So not only in terms of foreign reserve, just the demand for dollar, and in terms of international trade, you're going to see a realistic scenario, definitely not outside of the black swan, of a divided world's largest economy and the world's second largest economy. And you're already seeing the early stages, and they're rapidly advancing towards a full-out confrontation. Started kind of started with rhetoric from the previous administration, but that was most talk, but no action. But then somehow Joe Soros came out on the show and say Xi Jinping is the greatest threat to mankind, and then followed by a blackout of high intelligence electronics and chips into China. Well, you don't have, the China can do damage, not just stop exporting goods to the United States, and that's going to cause quite a bit of headache, even for ordinary use of goods. Not to mention that China is also a key exporter of critical minerals in rare earth that's used in F-35s, in vanadium that's used in all of the military ship shells and a lot of the missile equipment. So you think about the unfathomable scenario. I mean, it is so multifaceted that I don't think people are giving a lot of thought. I mean, another example, David, I just want to share with you, when I flew from Frankfurt to Mongolia, okay, the usual route is around Frankfurt to Mongolia is around 7.5 hours. You just go directly through Moscow and you land in Mongolia. But this time it took almost 11 hours because Russia is no-fly. So then Frankfurt will have to go through, and the Ukraine is no-fly. So you have to go through south of Mediterranean through Egypt, and then you have to wiggle through China, Xinjiang, and then work your way back up to, and you have to go through Turkey. You work through way up back up to Mongolia, Ulaanbaatar. Then can you imagine, David, if China were to side with Russia, which is increasingly looking to be the case, because there's no other options, and there's also already reports that China is supplying the arms to Russia, as well as North Korea, then how would Japanese fly to Europe? And then if Turkey, which is United States is a member of NATO, and then if Turkey were to be, and Turkey is another powerhouse, it's got 130 million people, and it's got its own. I mean, Turkey is not to be, messed with. A Russian jet flew over Turkish border for more than 5 minutes, was shut down. And so if Turkey were to switch sides again for being close to Russia, then you're looking at a world not only financially divided, militarily divided, economically divided, but also geographically divided. And that is just going to speak to so many things that people can write a book about, David.
Right, John, I'm going to pause you there. I hope I don't lose your train of thought.
No.
But I've said this on many interviews, people that follow me closely, and it's not about me, it's really about, the message. But I've often said that here's how it goes. And this is a black swan scenario. So the bond traders in Japan start selling treasuries off for whatever reason. It doesn't matter. It's just,
Right.
Why doesn't matter. Why are they doing it? They're doing it because they're doing it.
Yes.
But then the algorithms pick up on it. And when the bond traders in Switzerland says, I don't know what's going on, but the Japanese are off in the US bonds like they don't want them. We
Right.
better get on this. And so they start off in more than their normal daily amount. And that goes over to a trading desk in Hong Kong that says, we've got this kind of action for our whales, and they're really leveraged on bonds, and these things are falling like a rock. We better start selling. So I don't want to go on and on. You get the picture. Is that out of the question? Is that unlikely? Is that likely? What are your thoughts?
I don't think so much likely. The market has lost its price discovery process. And if you look at how the euro was taken down, it's a very reminiscent of how gold and silver. And David, remember, it used to be that you got to smack once every other Friday or before the long weekend. But it's almost now the opposite, where you can maybe get a relief on the Friday, but it was algo Monday to Thursday. Recall, the Fed has a limited ability to support bond prices, so I don't see this climatic sort of event that would sort of trigger a bond market crash. But however, all is possible if the volume, as you know, David, sometimes when the physical or when the COMEX volume, trading volume overwhelms the market, the cartels would retreat for a couple of days, and they might even add to the field, right? For the top to be in place, and then they would go on the reverse. So unless it's really out of hand, I think that the Fed can manage that through the futures market. But more interesting is, David, the question you should ask is, what would they do once they sell the treasury? Because there's just not many dollars. Like there's M1 and M2. Like there's what, less than $1 trillion M1 and M2. And what are you gonna, you got all this tens of $1 trillion bonds once they get converted to dollars, and what's gonna happen to that? And then so the China side is the same story, because remember, let me just reemphasize the point about the refuge, because this is very, very important. Remember that movie, The Hunt of the Red October, one of my favorite movies with Sean Connery? And the guys on the other aisles that always dream of start having a farm in Montana and almost, coincidentally, David, I think you just purchased an estate there. Well, you can't go to Miami anymore. The Chinese Communist Party can kind of do a show sort of on surface, dance, and then at the end, people, they're one and the same on the end, on surface they say, oh, you're the enemy, but then they take their bags of cash with the military aircraft with the gold and then the silver and then the Rolls Royals, and then they fly to Miami. They can't do that anymore. So that safe haven status is gone. And I think that's one very key point. And this is, by the way, David, this is not just Russia and China. If you look at Saudi Arabia, I think a lot of talk about Saudi Arabia already, but I don't think so much about petrodollar. It's not so much a petrodollar. Saudi Arabia can today, even at its realm, to convert their dollars to another currency. So it's not so much about the standards. But if you think about Saudi Arabia, the reason they pleaded allegiance to the United States is to seek protection from its neighbors, first of all. And secondly, back then, the United States was one of the largest customers of Saudi Arabia. And now, sometimes the US show us, sometimes the US do this and do that, and OPEC increased 1 million barrels and decreased 2. I think a lot of that, they're just getting a little bit fed up with all the rhetorics. and the compliance and all the rules they have to follow. Not to mention now the largest customer is Asia for Saudi Arabia. The military, the equipment, you have Russia next door to Saudi Arabia. In fact, Russia is probably a more natural partner because that would be then the OPEC plus OPEC plus, right? So that is actually a lot more a neutral and natural partner for Saudi Arabia. And I'm sure that Russia has made a number of gestures to Saudi Arabia recently, and I'm sure they're all, again, having second thoughts about what is it making sense economically and also sort of a protection insurance to stay within the SWIFT system. And then we're only talking about how many countries, right? Japan, China, and Saudi Arabia, but altogether, Saudi Arabia about $400 billion reserve. You're looking at $2.5 trillion reserve. I don't think, David, that they would do a crazy scenario, because if you own a bank $1, you can pay you have a problem. When you own a bank $1 trillion,
sure.
You can pay the bank has a problem, right? So they want to do as stealth as possible, and not to sort of rattle the snake, because eventually you still don't want to. You just want to do you want to piss off as few people as you can, not so much the Russian style. So I do think, David, that process already started, and that is one of the key reasons that gold didn't revisit 1550, silver did 1750 at that breakout level in 2020, in July 2020. I remember it quite clearly.
You may recall or not that when I basically started on the speaking circuit, I was kind of somewhat famous in the small world we're in for showing these video clips. And one that I showed very often in the beginning was come from the movie Rollover. And in that movie, it's a hypothetical. The Arabs stopped trusting the United States, and they sold every asset they had and converted it to dollars. And of course, it basically broke the system. And that was kind of my question about the bond market. But in the movie Rollover, the head banker, maybe the Fed banker, you can imply what the movie's showing you, was saying, no, the Arabs don't trust the dollar, but we're going to move into them slowly. We're going to do it slowly over time. We're not going to rock the market. And we're, going to handle this where it doesn't hurt anything. And that's kind of what you're saying. And I'm agreeing with you. I think that's a much more likely scenario. But still, we're talking about $1 trillion here and $1 trillion there moving into the precious metals, right?
Yes. And then on top of all that, David, there's a lot of talk about the central bank digital currency. I'm sure you've briefed your viewers. Essentially, it is a coupon, right? They're going to dictate what you can buy, and if you exceed the carbon credits, you cannot buy cow beef. They will tell you where you can buy. You cannot, if you have a CVS next door, why would you drive 30 miles to to Safeway? And then they will tell you when you can buy. If you are past 12 o'clock on a Monday to Friday, where you should be productive, you are shut out for the time being. And I don't think a lot of people are going to put up with that. And increasingly, the way you mentioned the kind of US, I don't see it that way as much. I think you're going to see a bit of a fractured innings within the US as well. You have the traditional Democrats and Republicans, but I think it's all sort of managed by the same shadow figure. But
Sure.
you have, I think increasingly you're going to have quite a few people that are well endowed and they make their 8-figure, 9-figure worth, and they were apolitical, and they're going to start reasserting themselves and say, I am not going to be putting up with this restrictions and this central bank digital currency. And I think they're going to start funneling their campaigns and have a voice in the United States. Probably is the only place standing on earth that would still enable you to do that. And David, I give it a lot of thought, and because of the pandemic, and give me a lot of time to sort of study. And you and I study already silver a lot, so there isn't a whole lot to read about. But I spend a lot of time reading at the histories of the origin of humans, and and then looking at what happened to the Great Reset, and crazy worlds being turned upside down. I'm trying to find a reason why this is happening. And a classic example is interest rates. And you have the same mouthpiece, or you have the same players, given the same set of circumstances and conditions, are spitting out completely opposite storylines. I mean, oil is at 80. Last time oil was 150 in 2011, 2012. I mean, they were lowering interest rates. And then only nearly 2 years ago, they're saying that, the policy should stay accommodative and that we can have an inflation band between 2% and 5%. Do you remember those days? There's only 3 years ago, right? And now they're saying that we should stay more hawkish because history has said that inflation can run away. So you have the same people, David. And inflation in Asia is not actually not that bad. And in Japan, they're still deploying the same methodology. Apparently, they didn't get the message that the storyline has changed. So despite a yen at 150, their inflation at 3%. And what's even more satiric is you have the same pundits, right, David? You only hear you see what you want to see. And this guy used to be talked down on the CPIs, are now taking CPI as gospels. And so I think there's quite a different thing that meets the eye. And the more I think about it, and that's why I make the call of a lot higher interest rates and a lot of own nothing and be happy, is to do with studying history as to who's really pulling the strings. And it's certainly not the presidents. You see what happened to Prime Minister Liz Truss, and she didn't know who the real boss and kept booted in 45 days. And there's numerous of those cases in Australia, in New Zealand, in all the different parts, in Germany and in Austria. It's really got to do with, I studied a bit of history and Khazarians back from the Turkish Empire and where the Ukraine is. I think there's still some remnants of these collective shadow forces that are the driving forces, and for that also reason, the Russia and the USSR. I mean, the Putin just want to see the same replay of Boris Yeltsin having $200 billion of gold flown to Switzerland and all the oil assets being divested, and China doesn't want to see this revisiting the old days of opium war back in 1850s. And by the way, these are all the same players that orchestrated all these maneuvers, and they were trying to reassert themselves back into the saddle again. And this time though, these regional players just say, I'm not gonna play ball with this. And this is really what we have at stake now. This is not about Ukraine versus Russia. And this is not even about United States versus Russia. This is not about countries. And so you have the macro plays at stake, this transnational maneuvers and dynamics. And then you have within each country, you have the nationalists, right, versus the transnationalists that are also duking it out. So it's very interesting. And with all set in mind, none of it bode well for the dollar. And I love your analogy, David. You said Japan just started selling bonds for no reason, just like back in year 2000, there's no reason for NASDAQ to crash. There's no reason for gold to go up. It was just when the market is so one-sided and so saturated that a very tiny move is going to make a difference. And then that technical trend gets triggered and off we go. You don't need any specific reasons. We're definitely living in very interesting times. There's going to be some major fireworks that was being culminated from multi-generational history of things that it might not necessarily pale in comparison with World War I and World War II for what we're going to see in the months and years to come.
Well, thank you, John. We're not going to end here, but two things. We are kind of running out of time. So if you want to kind of summarize and say 5 minutes or less, or just leave it what you said, we covered a lot of ground and we both know each other well. I think the communication was pretty effective, but that's for the viewers to determined. If you want to do a summary, that's great. And then after that, I just want you to visit Silver Elephant for us because, we've been on that side for a long time. We did take it off the list and you still talk to me. But my premium subscribers, usually when they buy a silver company, they're in for the long term. So it will be an update for them and others as well. Back to you.
Well, David, the fiats are a matter of confidence, and as I said, a range of convenience. So the confidence of the dollar is shaken. I mean, they're clearly taking sides. They have gone away from that neutrality position. And secondly, there's just too many, the dollarized system. There's not a world where you can go without people's acceptance of dollar. So in itself, just the abundance of dollars spells a negative omen for bad omen for dollar going forward. But more importantly, as I mentioned, all these geopolitics events are not covered well in the mainstream media. People ask me when the Ukraine war is going to end. My answer is, when is the next war going to start? So I see so many headwinds, and none of them is good for the dollar. And it's almost unfathomable. It's almost a dream it's unimaginable to see silver at $19. There is a lot of managing of silver going on, as you know. And I think you covered that well then as well as anybody. I do believe that if the market were to be left in its own device, which will never happen in any case, but eventually the pendulum is going to swing, is we can easily make a very plausible case of, say, 1980, oil was at 40, silver was at 50. It's almost like a 1-to-1, right? So if I think that would be a pretty good sort of a ratio going forward. And then if you look at gold at 800 back in 1980, and if oil is tripled, then gold should be at around 2,500 to 3,000. And this is a fair, David, at 100 and 2,500, I think it's a fair, it's sort of like, it's a fair value, but not to mention once things like go out of hand and once silver gets past 30, who knows what's going to happen. So
right.
Let's talk about silver elephant. We've really stayed low key in 2022 because I didn't see a lot of use to out there pounding our chest, and we've been conserving our cash. We haven't really raised much money at all, and minimize dilution as much as we can. But our priority has been maintain our community relations and advance some of the updates of the technical studies to pave way for feasibility study. The ounces are still there, David. We got over 100 million ounces of silver, about 3/4 in the measured indicated category. So, and if you look at the charts, and a lot of people are pounding us on the performance. Well, we survived, right? Not like Orcana or like Lexico and or like Defiance, who's having some permitting issues, and the list goes on. And we're not looking to prod ourselves and race through the bottom, but if we put the chart of Silver Elephant and say First Majestic side by side, and silver chart side by side, I mean, there's a lot of resemblance, except that we go down further and we jump higher. So I think for I do think now you can get lower, you can get a flush down to 1750 or even potentially $15. I don't think so, because I think the equity market is really bottom, at least for the next 6 months. And then it's just really quick on that. If you see that there's already pickup on the inflation story, the Dow is starting to outperform NASDAQ. And that is being a number, I haven't seen that for a long, long time. And you're seeing that because the Dow has pricing power, right? You're gonna have to buy that toilet paper regardless, but you don't have to subscribe to, buy the extra computer or subscribe to the extra cloud service, for example. So, it's the same diversification strategy. There's a Hecla, there's Coeur d'Alene, there is the First Majestic and Pan American Silver and Max Silver. These are all great names and they have their own pros and cons. And usually they're fairly well priced by the market. I mean, a better story trades at a premium. The discounted story has some issues with associated. But then there's a second tier story. It's like Silver Elephant with established resource in a jurisdiction that we're very comfortable. And then I'm sure there's a number of other companies of similar sort of a stage, and then throw a couple of exploration stories into the mix, and And I can't think of a better time to sort of reestablish your position, because like I said, the gold to silver ratio is topped. So you're going to start moving gold to silver. The equity market is bottom. So that spells well for the risk takers. And then the dollar is going to be sideways, I think, for the next 3 to 6 months. And people are sort of sticking their nose looking at silver and gold, and they put a bit up there, always sticking bit to try to get there, because they've been whacked so many times. I see silver at 17, at 18. Well, right now it's a 19. It's 200-day moving average. I don't think it's going to go below that for more than a day or two, and then it's going to oscillate between that and the 200-day moving average, which is about 21-ish. And it's going to do this couple of rounds until February or March timeframe when the drive is going to start moving, and then you're going to see, once it got past 21, then we're back in the saddle, David.
I like that. Well, let's end it there, John. It's always a pleasure to speak with you. It's always good back and forth. None of this is rehearsed, really. Just two guys that think deeply upon not only the silver market, but the geopolitical scene. And we like to tell it as we see it, and forego the political pressure that some people succumb to. So thank you, John.
Thank you, David. Oh, one other thing is I have a Twitter. It's quite, I tweet quite a bit. And you can find me there at John. Just search John Lee Battery Metals, and Silver Elephant. Just to plug, symbol is ELEF, and the OTC is SILEF. These geopolitics. I mean, David, this is not the time to go Warren Buffett, where say buy and hold. You want to get out of bonds, and you want to really lighten your equities. And now is really time to revisit gold and silver. Yes.
Well said. Thank you so much, John.
Thank you, David.